Sanbonani, good evening, Dumelang, and welcome to episode 174 of the Private Property Podcast. I'm your host, Zama Kumalo. It's a Monday edition of the Private Property Podcast. I'm sure some of you might be either slightly surprised or quite happy to see us on your screens. I know it's Christmas week. Many of you are probably out on holiday, perhaps even enjoying some time with friends and family. Really hoping that you are staying as careful as possible. We are seeing, of course, an increase in the COVID numbers right now. So wherever you are, do make sure that you don't, kind of lose focus and become relaxed, especially right now. We are in the middle of a second wave. So do make sure that you take all the safety precautions possible so that we can certainly get through this festive season and see each other in the new year. Welcome to all our new viewers. If you're catching us for the first time, where have you been? I mean, it's now December. We've been around since March. Well, you certainly have quite a number of episodes to catch up on. We are on episode 174. So do make sure you go back to some of our old episodes to catch up on some of the gems that we have dropped. I think there have been so many property lessons over the past few months, and so many people have even gone to buy their properties, make better informed decisions before buying their properties, negotiate quite bullishly, because I now know that in property, just about everything is negotiable, so you don't need to take everything at face value. So that's some of the value that we've given to our viewers at home, and we do hope that you're going to be with us throughout the festive season, but also, of course, in the new year. We're not going anywhere in the new year. And if there are any topics that you still think we haven't quite covered or you'd like us to go back to and cover really well, drop us a message down here below or across our social media platforms. Talk about social media platforms, you can catch me on @Zamantunga_ on Twitter as well as on Instagram. Now to get to this evening's competition. And of course, this is a competition that we're running throughout the festive season. This is, of course, questions for the champions. And in questions for the champions, what we are asking you to do is to get 4 of your friends and family and form a team of 5. Give yourselves a unique name. And then all you have to do is tune into the Private Property Podcast every weekday at 7 p.m. And when you do tune in, let yourselves be known. Let us know that I'm from Team X and we're watching. I'm very excited. And then, of course, wait until the end of the show where we're going to be asking 5 questions, very 5 questions or 5 statements. Sometimes it's true or false. And all you have to do is answer first. Make sure you use your team's name when you're answering. And the first team to get all 5 correct walk away with 1,500 Rand. I see Omar Shingang is saying Team Magnificent 5 is here. Welcome to Team Magnificent 5. Welcome, of course, to the show. I know Martha is one of the top 10 gang members. She probably recruited more of her friends and family to come through and watch us. And of course, as I was saying, later on in the show, then we're going to be asking you 5 questions based on the previous day's episode. And that's how you'll get to walk away with 1,500 Rand. And later on in the month, so that's next week, we'll be giving away 15,000 Rands. And in that one, we'll be asking 10 questions. So do make sure that you watch each and every single episode, because the questions that we'll be asking will be based on the previous day's questions, episode rather. So today's questions are going to be based on Friday's episode. So you want to make sure that you're always tuned in, always plugged in. And of course, you and your team members are also watching live, and then wait until the very end to hear those questions. Well, to get us started on this evening's conversation, we're speaking to somebody who needs no introduction to the show. We've had him here before. He's a great property investor. He's a director and co-founder of Property Pick. That's Leroy, Slava. And we're talking about key 5 considerations and questions to ask before buying an investment property. Leroy, good evening, and thank you so much for joining us.
Zama, how are you?
You know what, Leroy? It's December. We've made it this far. I think we now just need to keep pushing for 2 more weeks so we can actually see 2021. I think if we can manage to do that, we probably would have done quite a lot this year. It has been quite a difficult year for so many people at home. So I'm sure that if we can just cross over to 2021, I think we've probably done our best for this year.
No, true. I told someone the other day, I said, if you can make it through this year, you can make it through anything, eh?
This is so true.
But nothing can stop you.
We're talking property like we always do. We love talking property. And I think one of the things that we are seeing a trend in is that more and more people are getting interested in this asset class that is property. Some people are already homeowners who live in their primary residence. Some are looking at increasing their property portfolio and adding more properties on their portfolio. And I think when we start looking at that, there are certainly certain questions or considerations that viewers at home need to always think top of mind, especially those who are now looking at going the property investment route. So I think it's one thing when we talk about buying a property that you want to live in, that's all good and well, and that's why we also have the first-time home buyer show that helps viewers at home with buying that first property. But now we're looking at when you want to now start wearing that investor hat, and it really does start with that one property. Perhaps take us through, firstly, before we even look at the considerations, perhaps take us through the thing that can help people decide whether they should walk the path of exploring property as one of the asset classes to go into. I mean, you and I both know how admin intensive it can be, dealing with tenants, and it's as much as we are able to make it easy and accessible for people, we also know that it's not necessarily for everybody, because it does come with its own set of work. So before we even look at the 5 considerations, how should somebody go about thinking through whether or not they should go into property or not go into property investment?
I think everyone actually has to get in, because you get in by default anyway. Hey, you buy your primary residence, and it's good to understand how that will work. And if you're not buying, you're renting. So you need to understand how that will work as well. So I think by default, we all have to understand how property works. And I believe, Zama, whether you make your money in stocks and shares, in business, and whatever you do, whether you make it in cryptocurrencies, somewhere you're going to have to store that money into property, right? So I believe everyone has to at least educate themselves and have a basic understanding of how property works.
And that's such an important thing, Leroy, that you mentioned, that in many ways we're already affected by property. We live in a property, whether it's your parents' property, whether it's a rented property, or of course, whether it's your own. So in one way or another, all of us have some kind of relationship with property or a property in some shape or form. So it's now about whether or not we want to go into investing into that particular asset class, and how far we want to invest. I know some people, they'll say, look, I'll just want maybe 1 or 2 investment properties, and that's it. I'm not really looking to have a 10, 20 property portfolio. I don't want the admin, or I think that's just too much. I'm okay with 2. I have 1 child. I want to, leave it for them. Once they start working, they'll have a property that they can just move into. So we all have our different reasons why we then end up going into property investment, and the various ways that we essentially just think through it. And let's perhaps then get into the considerations. What would be the first important consideration that you think is important for viewers at home to be, to think about when they are looking at, purchasing that investment property?
I think firstly, important what you said is we all get into it for different reasons. Some want to leave it for their kids. Some want a second income. Some want it to be a primary income. Some, right? For whatever reason you get into it, is firstly, you need to have a plan. Why do I want to get into property? What do I want? Do I want 1, 2, 3 properties for retirement? Do I want cash flow immediately? Why do I want to get into property? Do I want to buy and sell? Right? So I think firstly, you have to, why do I want to get in? Put a plan together. This is why I want to get into property, right? And then once you have your plan, that will determine what type of property you're going to buy. So am I going to buy and sell property? Am I going to buy a buy-to-let flat, a house, a multi-let, maybe buy a house with a granny flat and convert the garage? Depending on your experience, am I going to get into commercial or bigger deals? So I think firstly your plan, and then your plan will determine what type of property you're going to buy. And am I going to get into student accommodation? What am I going to do? Right? And that will determine your strategy. Once you have that, right? And that will also determine the budget, because budget is important. How much do I qualify for? Get a pre-qualification. Do I qualify for R1 million? How much cash do I have? How am I going to finance the property? And that will determine what price you go for. I don't know, did I jump 2-3 steps there? So firstly, get your plan. Your plan will determine what type of property you buy, determine what your budget is, If do you have a deposit? Can you get finance? Can't you get finance? You need to work with investors, maybe 1 or 2 investors. So then determine your budget.
You know, Leroy, before we probably go to the next step, I like one of the things that you mentioned about when you figure out what your why is in so many ways, you're probably going to get a better sense of the type of property that you are interested in going into, whether it is, you know, student accommodation, perhaps bigger residential, or perhaps commercial, as we were saying. Perhaps take us through some of the thinking with maybe the top 3 types of property that you can just briefly think of. Because perhaps with some people who are starting from a blank page, as much as they can figure out their why could be, I want to make sure that when my child, you know, starts varsity or starts work, their first job, they don't need to buy their first property. For them, once they've answered that, that may not necessarily help them get a better sense of, okay, what kind of property am I then going for? Am I going for I mean, already we'll obviously exclude a lot of student accommodation type places, but because they don't know what they don't know, it might not best answer the type of sort of strategy. So perhaps take us through the kinds of strategies that we can potentially find, just to give viewers a better sense of what they can already kind of anticipate after they figure out the why, because then you really are looking at the sort of the next stage.
Look, thanks, Zama. For that, I look at it like a triangle, right? So your base will be your low income, low risk, low income. Your basic buy to let. You buy a 1 bed, 1 bath, rent it out to a family, or buy a house and rent it out to a family, a 2 bed. So if you have never invested in property, I think that's a good place to start. Start with a simple flat. Or a house, rent it out to a family. Make sure that your rental income covers all your expenses, and there's a cash flow or monthly profit coming out of that. If you haven't invested, that's where you start. And then once you've done 1 or 2 of those, then you can move up to maybe saying, listen, what I want some capital or some lump sums as well. So let me maybe buy and sell 1, 2, see how that works, gain some experience on that. And then maybe go to multi-lets where you rent out a house and a granny flat and a garage, or you have a few units in 1 yard. But with the triangle, the higher you go, the higher the returns, but the higher the risk as well, right? And the more things you need to know. Now, when you go into your multi-lets, now you need to know about zoning. You need to find out what the rights are of the property. And then you go up to your student accommodation, your commercial, whatever it is, developments, and I think that's a safe way to start. You start with your simple low income flats, 200, 300, and people think you need millions to buy property. I bought flats for 200,000. I bought houses for 170,000, 200,000. So I think if you are a beginner, that's where you start. And what we find, a lot of people are very ambitious, which is good, and they'll say, listen, I've got a 5 hectare which I want to build a mall on. And we say, listen, what's your experience? And they say nothing. And we say, maybe that's not where you start today. Start with your basic, simple properties, and you work your way up to the bigger deal.
I'd be very scared, Leroy, of somebody who hasn't done property at all, wanting to buy a 5 hectare piece of land and build a mall. I would be so scared. I don't know if as a private investor, I back that person, because as you're saying, I think even as private investors, we do look at what your experience is. And sometimes perhaps you yourself don't have the expertise. Perhaps you're a finance person or your background is something else, but then who's in your team that's helping you, essentially build this mall that you have ambitions of building? What kind of numbers are you running? Where is the mall? I mean, you already know that South Africa is oversaturated with malls so much, and everybody still wants to build a new one, and the vacancy rates in some of them are not that great. So I think one of the big things, viewers at home, I hope they do take out of that comment, Leroy, is you don't have to start with a 10-bedroom house or the 20-unit apartment block. you literally can start with one apartment, especially when you have ambitions of having a big portfolio. I mean, I think there's almost a category of people who are probably primarily interested in just having 2 or 3, maybe not more than 5 investment properties, and that's it. And then there are those who over the years actually want to have quite a few, and different kinds of properties, perhaps servicing different types of asset, LSMs. So in the event where you're that person, perhaps your end goal is owning multiple blocks of flats that are, let's say, minimum 50 units, you typically don't start at that level. So you almost need to think, do you understand the basics? Do you understand how to manage tenants? Do you understand how to do your financials? Can you read the financials when you just have that 1 or 2 units? Because the moment you've got a 50-unit building, you need to be quite finance savvy. And I think that's sometimes something that a lot of people want to jump a few steps. It's like how in school, you're not going to get into grade 1 and then the following year, you're going to get put in grade 8.
Yeah, you got to agree.
Exactly. So you kind of have to go through the various stages. I mean, when you're very smart, perhaps they might make you skip 1 grade, but it's very rare that you'll get from grade 1 and then to grade 10. So even when you skip 1 grade, maybe that 1 grade could be, instead of buying, and I did this, instead of buying 1 property first, I bought 2 first. So you kind of missed that just buying 1. So you're now managing 2 properties from the onset, and then having to learn how to do that with 2 properties. So I think it's also just understanding that it's steps, and don't try to jump too many because you'll end up biting off more than you can chew. Leroy,
it's long term. You need to be patient. You buy, make the mistakes early as well, because you are going to make mistakes. Make the mistakes early with the cheap properties. Get them in. Pay your school fees. And then
their school fees can be so expensive, Leroy.
You're gonna pay them, eh? We all pay them.
Yeah.
Haven't you paid them? We all have to pay them.
Listen, I paid my school fees and just real and I think in many ways it's also understanding that rather pay school fees with 1 or 2 units early on, at 3 units early on, and let's say those 3 units are all under 5 or 600K, than needing to pay, school fees with a 5-10 million rand property. That's going to have so many.
It becomes painful.
Yeah, then you need to raise all kinds of capital in order to pay for said school fees. But Leroy, I want to take a quick break, and when we come back from the break, we'll look at the other key considerations that viewers at home need to think through when they want to buy their investment property. Remember, later on the show, we will be having questions for the champions. So if you are watching with your team, we know Team Magnificent 5 is watching. That is Martha Shingange's team. They have let themselves be known down here. Then you definitely want to wait until the end of the podcast in order for you to catch this evening's questions. And here's a quick word from Estee on the winners of Asian Connect.
Good evening, Private Property Fam. As you know, we're calling on all estate agents so that you too could win 1,500 Rand cash. All you have to do is share your 2020 highlights with us and how you managed to remain on top of your game. I have tonight's winner, so drum roll, please. It is Leanne Pillay. Leanne says, it's been a challenging year with the pandemic. We didn't know what to expect, starting work on the 1st of June at level 3. However, thanks to the interest rate cuts, our industry did well. My highlight was the rush of emotions when taking out buyers and finding them homes. The excitement in the industry and the matchmaking that was done. It was the conversations that we missed during lockdown that gave me a better connection to my clients, and happy to say we stayed safe and very responsible, keeping our clients a priority. Well done to you, Leanne. You've won 1,500 Rand cash, and you could be our lucky winner tomorrow night. Back over to you, Zama.
Welcome back to episode 174 of the Private Property Podcast. I'm your host, Zama Khumalo. It's the Monday edition of the show, and we do hope that you have had a great, certainly great weekend. Look at me talking about the evening. A great weekend. I'm sure you're having a great evening watching the Private Property Podcast, probably watching it from a holiday destination, or of course, watching it with your friends and family. If you haven't heard already, of course, we are running questions for the champions, and that is a competition where we're inviting you to invite 4 of your friends and family to make sure that you give yourselves a unique name and tune into the Private Property Podcast every weekday at 7 p.m. And you answer questions at the end of the show where you'll stand a chance of walking away with 1,500 Rand. It's that easy to win during this festive season. So do make sure that you get your friends and family tuning in and walk away with that cash prize. Now, this evening, we are looking at considerations to certainly, ask yourself before you buy your investment property. And I'm in conversation with Leroy Slava, who is a co-founder and director at Property Pick. Now, Leroy, before the break, we're looking at understanding your why, looking at making a plan, because that's also going to inform the kind of budget that you're going to have, the type of strategy that you're very likely going to go into, the type of property that you're very likely going to also potentially buy. What's the next consideration that we need to be, very sure, essentially, that we ask ourselves before we get that investment property?
Look, what we said, okay, determine what your strategy now. Whatever you choose or whatever your budget is, let's say you want to get into multi-lets, whatever you want to get into, right? Now you need to go find an area where that works. So you don't just choose an area where you want to invest. Whatever type of property you want to invest into, that determines which area you're going to go. Because every investment strategy does not work in every area. Like, for example, student accommodation, it's location specific. It has to be close to tertiary institutions. Buying and selling property, you can't do that if it's a new area. Most people have high bonds there, so you have to get an older area where most of the bonds are paid up, right? Where there's a demand as well. So that will determine the area that you look for, and then only do you go and you look for that property in that area. So I think that's what was that tip number 2, 3 is plan, strategy, budget, then go into where that specific property will work, where you'll get the rentals or you'll be able to buy and sell in that area, whatever it is you decide to do.
Now, Leroy, how do people then go about getting some of those properties that fit their strategy? Because as much as, for example, people can go to privateproperty.co.za, some will say you're not quite finding good deals because of whatever reason. Perhaps the price point isn't quite the sweet spot for you when you run your numbers, so it's not going to cover all related expenses, and you essentially have to top up, and that's not what you want. So what are the other avenues where people can try and find properties before they're even listed on a website like Private Property, for example?
Look, there's a few ways. Look, you've got your private property. Go to our website. Our website is different to private property. Our website is just for investors, right? So www.propertypick.co.za. Those are on the platform. There are people that want to sell quickly. There are investors that want to get rid of a few properties. So check out that. That's another platform. But why people mostly, Zama, it's hard work finding a good deal. Eh? They don't just fall out the sky. Robert Kiyosaki says he looks at about 100 properties to buy one. So a lot of people give up too quickly because they look at 2 deals and they put in offers and it's rejected and they give up. So you need to look at a lot of properties. You need to view them physically, run your numbers, put in offers. And most of your offers will be rejected, but you don't need many to be accepted to be successful in property. So I think the people that are saying that they don't find good deals is that they look at 1, 2 deals and they get 2 no's and they give up. So you need to look at a lot of properties, put in a lot of offers, get a lot of no's, be rejected a lot of times, but you only need a couple of yeses to make money. I don't know, does that answer your question there? You said, how do they get to these properties?
It partially does. And I think probably I'd also add, Leroy, because you are correct that deals don't fall from the sky. And as much as some properties, or a lot of us are going to buy properties because you go to a private property or perhaps a property pig. So many of some of the really good deals don't necessarily make it onto your platforms. And I think that probably makes it so much more important, especially when you're now sort of bullishly looking at being a property investor, as opposed to when you're just buying a normal residential unit that you want to, you know, rent out. That's probably a different consideration. But in the event where this is something that you're in the bullish stage of acquisition, and you tend to go through that. I mean, I have moments where I know that I want to acquire X amount in this period, and so you're kind of bullish in that period, and times where you kind of wait it out a bit and you're saving, building up on your cash reserves as much as possible. So one of the things that I certainly, you know, tip viewers at home is also building a relationship with different estate agents that operate in different areas, because they're the ones that would, you know, obviously get the mandate before they even put it on. They already know that this is a property investor, this is what you're relatively looking for and what your budget is. And they, of course, are going to send it to you because they want to make that sale as quick as possible. And so if they can make the sale before they even list, they're certainly going to do it. So I think don't underestimate the importance and the value of building relationships with different estate agents in different areas, and also just keeping tabs on them. Sometimes it's calling them up saying, listen, this is the kind of property I would like. If you have anything up that around that those specs, let me know before you list it. And you then get into that relationship. It helps so much because you end up finding some properties beforehand, and you're able to also get quick insight if it's a very serious seller and who wants to let go of that property as quickly as possible. So the transaction ends up being very quick, very smooth, as opposed to a seller who has all the time in the world. They've probably set a very unrealistic price on that property. So understanding those things, because those are some of the things that you pick up along the way when there are serious sellers who are just like, listen, I want this gone for whatever reason. Sometimes they want it gone because they need to open up their own liquidity. They've got another transaction they need to finance. Sometimes they just need the, you know, relief in their balance sheet. So there are always different reasons why sellers sometimes want to sell as quickly as possible.
And so Zama, I think that's one of the most important questions you ask as an investor. If once you get known and people start calling you, is why are you selling? Why are you selling? Because what that question does is you want to determine where the pain is and how far you can negotiate and how motivated the seller. Why are they selling? I'm getting divorced. Or why am I selling? I'm relocating. I'm moving to New Zealand or Australia. Why am I selling? There's a later stage, or this is the problem. And that tells me, so that question tells me whether I need to move quickly. If they tell me, listen, I'm not desperate. I want the full market value, then obviously I say, listen, then I might not be the guy for you. Then I'll refer them to an estate agent. So that's a good one, Zama, that you shared there, guys. That's a note, write that down. Why are you selling the property? That's my second question after I ask them how much they want for it.
Usually that's my first question. Because it gives me a good insight. I mean, to the point where sometimes I'll ask that question before even viewing a property, especially and particularly when the price seems slightly too good to be true or lower than others in that area. I'll ask, you know, what's the reason for the sale? I'll ask it again when I decide to go view, just to see if the story is still the same. Depending on the type of property, you then, you know, speak to the tenants, speak to the people in the complex. If it's a complex, for example, speak to security, because they give you quite a lot of insight into not just that unit, but certainly that complex and that area, because perhaps you might not be as familiar with that area or that street. So you want to really get as much insight as possible. But Leroy, before I let you go, any final tips for viewers at home who are looking at, you know, buying a property, an investment property in the new year? We know that a lot of people are potentially looking at taking advantage of the historically low interest rates and might want to get a new property. What final tip would you give them as they start trying to make a decision for that buying that property?
Look, I think from my personal view, Zama, I think this has been a difficult year, right? With a lot of people going through a lot, businesses, restaurants, people getting short pay retrenched. I think what we're going to see in the new year is we're going to see a lot of those people that need to sell their properties quite quickly because holidays are coming. So I think now is a good time, guys, to be alert, start educating yourself, upskilling yourself in how to analyze properties, how to run the numbers, because I think a lot of these deals are going to come up, and I think we need to be ready to take advantage of them and obviously help the people, but with that, help yourself as well. So I think, yeah, be alert, private property, be on the podcasts, wherever you can upskill, read up, educate yourself, put a plan together, because that's where this will start. So why do I want to get into property, right? And that will determine what type of property you're going to buy. Check out our website as well. We're getting a lot of these investment opportunities coming up on our website, the Property Pick website, where people want to sell quickly, or investors who maybe have a big portfolio are looking to offload older investors. So check out the platform. But yeah, take this time out, plan the next 2 weeks or so, what you're going to get, and yeah, I think there's going to be massive opportunity in 2021.
And that's a great note to leave it on, Leroy. Thank you so much for joining us this evening. And thank you for speaking to us this year on the Private Property Podcast. Wishing yourself, your family, and your team a great Christmas, and seeing you in the new year.
Thank you, Zama. Thanks, guys. All the best. God bless.
And that is Leroy Slava, who is the co-founder and director at Property Pick. We're going to go for a quick break, and when we come back, we'll be going through those 5 questions or statements for questions for the champions. We'll be back just after this. That was Leroy Slava, who's a co-founder and director at Property Pick. As you can imagine, off-air conversations sometimes take longer than they should, because that is how great it is to talk about property. We end up not wanting to end the conversation. Well, it is that time of the evening where we go through questions for the champions. And if you are watching us at home, I'm sure your team members are also eagerly watching and waiting for those questions. We've got 4 questions and comments. I see my eyesight is now failing me, but I say, let me just expand my screen. I think it's Trish. Yes, that's Trish saying, didn't know what I have learned today on the live podcast. Thank you to the team and all the important info, #Team Biz. Thank you very much there, Trish, and welcome to Team Biz. I know that you guys have been watching throughout the podcast. So this is now that time that you've all going through questions for the champions. And the first one, this is a statement. So we've got 5 statements, just a quick one on how the competition works. We're going to have 5 true or false statements. The fastest team to answer the questions correctly walks away with 1,500 Rand. Remember, when you answer, use the hashtag of your team in the answer as well, so we're able to track which team is answering. It's very important that we're able to do that. We're going to be, the winners are going to be announced tomorrow on our Facebook page, so do watch out for that announcement, and the money is going to be paid up at the end of the week. And the first statement is, budgeting is the process of creating a plan to spend your money. True or false? I'm going to repeat that. True or false? Budgeting is the process of creating a plan to spend your money. Remember, the questions that we'll be asking this evening are based on Friday's conversation with Eco Quagrain. So that is the conversation that we are mostly referencing in this evening's questions and statements. And the second statement, again, true or false, equity is the value of a mortgaged property after deduction of charges against it. I'm going to repeat that one. True or false? Equity is the value of a mortgage property after deduction of charges against it. True or false? And the third one, true or false again, you can use your equity on one property as a down payment or deposit for another property. True or false, you can use your equity on one property as a down payment or deposit for another property. Remember the great conversation that we had with Eco Quagrain on Friday? Well, these were some of the things that we were talking about, better understanding our finances. I know that he's a finance guy, so we always want to make sure that we get our finances right, because as I always say, property is finance, and the sooner we kind of come to terms with that, certainly the better. Now, the fourth statement, true or false, debt is another technique of managing money. I'm going to repeat that. Debt is another technique of managing money, true or false. And the last statement is ROI stands for retirement overall investment, true or false. So true or false, ROI stands for retirement overall investment. Those are five questions and statements this evening for questions for the champions. All the best to all of you who are entering, and of course do watch out for the announcement of the winner tomorrow on our social media page that is on Facebook. All the best to all the teams watching us. Remember to watch tomorrow's episode where we'll be asking questions based on tonight's episode. So it is that simple to walk away with cash right here on the Private Property Podcast. Well, that's it from me, Zama. It has been a pleasure to be with you this Monday, and that's it from us and the team, and we're going to be back again on your screens tomorrow at 7 p.m. Until then, hoping you're staying home and staying safe.
Hi, I'm Clinton Banfield. Our family and I live in Cape Town on the Western Seaboard. To be able to wake up and take in the scenery every day is an absolute pleasure. We probably have the best views of Table Mountain. There's some really amazing suburbs in our neighborhood. There's Milnerton, which is a central hub close to the city. There's some beautiful homes situated along the canal, which give you a breathtaking view of Table Mountain. A little bit further along the canal, you'll find Milnerton Golf Club, which is a great place to unwind with your mates. Then we have Blouberg, which is world-renowned for its beaches, where you'll often see kite surfers taking full advantage of the wind. To To top it off, there's a great variety of family restaurants in the area, like Blue Peter, where people love to meet. The Bayside Mall is a landmark in Tableview, giving you an all-round retail experience in a relaxed and convenient environment. As a family, we've chosen to live in Atlantic Beach Golf Estate in Melkbosstrand. Our suburb is so chilled, it really gives you this constant holiday feel. We've lived here for 2 years and we've really enjoyed the laid-back lifestyle, and this is our neighborhood.